Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
As I clicked over to this workspace, we'll take a look first at the yen options and the yen pair, if you will. See if I can make this a little easier for me to see. Bear with me. I'm reorganizing my WebEx windows. And I put up two charts in here. This is kind of interesting, and hopefully this is food for thought about your technical analysis and, of course, how it relates to these markets that we're discussing in particular. And let me talk about the lower window first. In this chart window, I put in the ISE symbol. This is the yen symbol. I said we'd talk about yen and then euro a little bit. And I put in a 111-minute bar chart. Now, anybody who's heard me speak before or sat in on some of my TradeStation classes may know that I get a little obsessed about data sampling. As a technical analyst, I get a little obsessed about how we sample data and how we organize data. So I will take a look. I often take a look at any market I'm involved in, and I take a look at the length of the session, and I start with a guess, hopefully an educated guess, about some logical way to divide and sample the data. Well, this session runs 555 minutes. So by using a 111-minute bar chart, I'm coming up with 5 bars per day. And each bar is sampling the exact amount of time. When I use the time-based bar chart, time is my x-axis. Time is my data sampling rule. And I want that to be consistent, just as someone who might be doing a political poll has to have some honest and consistent way of sampling for opinions. Well, I'm sampling market data. That's what a chart is. That's what a technician does. So I've set this to be a 111-minute bar, giving me 5 bars per day, and each bar is the same length. Now, I'm not lobbying for the 111. My point is that in this example, I wanted to look at some trends that last 3, 5, 8, 10 days. I'll squeeze this in a little bit more. So right now, we're looking at the beginning of April on the left, right up through today. So we see a number of different moves. We're seeing a little more detail than we would see in strictly a daily bar chart. Excuse me, but we're not micro trading in here at the moment. Food for thought, but that's why I set it up this way with 111 minutes. The blue indicator is a 20-bar simple arithmetic moving average, and I just put it there to give us all a reference point as we look at the chart as to trend and general direction. In the chart on the top, I'm bringing the bars a little closer together just to see them. The chart on the top is the dollar-yen spot pair. And again, being creative with my intervals, this time I sort of took the back door. I said if I'm going to look at 5 bars per day on my index, perhaps I want to look at 5 bars per day on my Forex pair. So I made a 288-minute bar chart. This is a 4-hour market. I'm looking at a 288-minute bar chart, which is going to give me 5 bars per day in the 1,440-minute day. I know technically it's a 1,439-minute day. I decided not to quibble over that one, so I made it a 288-minute bar. And I'm trying to highlight some of the things you can do in TradeStation, but I'm also talking very earnestly about the kind of technical analysis that I think can be very important and that can be very useful in organizing and sampling the data. Now, as we start to look at the options, we titled this session Hedging and Risk Management, and it's really just kind of an introduction and trying to also create some picture of how these options integrate with the markets that you may be involved in already, such as spot markets. So let's take a look at, we're looking at market analysis, and let's say we focus on the spot pair. I'm going to guess, and this is not a judgment call or a judgment about anything else, but most of us are probably going to look at a spot pair, or we may be drawn to the options because we want to use them in conjunction with either trading the spot pair or hedging the spot pair. So if we look at the chart, let's take the example that we're going to observe the market, and we have some exposure to a dollar rally. Now remember, in this pair, this is dollar-yen expressed the same way. You see the two charts are essentially the same. In fact, let me back up 1 second, if you don't mind. I'll get back to that in a minute. But there was a point that I really should have made that I didn't, and I set the intervals in both charts so that I intentionally get 5 bars per day. Now each bar covers a different amount of time, but within the 24-hour definition of a day, we're getting 5 bars. And I guess the observation I wanted to get across was how remarkably similar the charts look. The vertical, the light gray verticals are the beginning of the quote-unquote day. I say quote-unquote because in one of them the day starts at 5 p.m. New York time. The other one the day starts at 7:15 a.m. But it is kind of interesting how the trends, the key points, seem to appear quite consistently in both charts. I didn't really think about that until I was building the charts, and again, working backwards from the 111-minute back to the 288-minute to keep the 5-bar per day concept. All right, let me return to what I was saying. I interrupted, but the technical analysis stuff I think is important. I think it was an interesting observation. And let's say we're looking at the spot pair, and the concern, we notice that there's a resistance area here. This was the highs that were made just a week or so ago. And perhaps our exposure is to the dollar rally. Now remember, as I was saying when I interrupted myself, this is dollar, yen. So my concern is a dollar rally in my scenario, in my story here. And I'm looking at this 96.50 area. 96.50 falls right about there, so it's close enough for our discussion. Let's take a look at the options, and I set up what we call the option station analysis window. Those of you, I'll push the font a little bit. I don't want to make it too big, but maybe it'll be easier to see. Those of you familiar with TradeStation will be familiar with the option station analysis window. We use it for running out the chains and getting all the Greeks and theoreticals and volatilities on options for stocks and for indexes. You'll notice that, as Steve mentioned, these are all European. It was up on his slide. The expiration, if I remember correctly, is third Friday, and it's a noon expiration. And it's
correct.
Cash settled. I wanted to say that, but I also want to reiterate what I said before. Check and double check. I'm always glad to have Steve back me up.
You should always check. Yep.
But do check and double check. So it's that third Friday that we're kind of used to, but it's noon, and it's cash settled, and it's European, which you might not be used to. So do double check that. We try and make that as clear as possible in TradeStation. You'll see the European, 51 days left. I'm focusing on the Julys just to have a shortish to medium-term option for the point of the discussion.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.